Hi, I'm Jonathan Banks, Executive Automotive Analyst at NADA Used Car Guide, with this month's industry update. Auction prices reversed course in May for the first time since late last year. The declines are not surprising, but the degree of the drops through May came a bit sooner than industry experts expected. NADA's forecast of used prices peaking in April was right on the mark and went against traditional beliefs that used prices peak later in the spring. The predicted seasonal downturn in demand, falling gas prices, and growing supply of late-model fleet units entering the used market were some of the drivers causing the price declines. Gas prices dropped last week to about $3.60 per gallon from nearly a month of prices that were getting close to $4 in late March and early April. The declines mirror the trend we saw last year, and consumers reacted similarly by pulling back on demand for small and mid-sized cars, where used car prices dropped about double the industry average. Growing rental fleet returns place additional downward pressure on prices. High-volume compact car models like the Ford Focus, Nissan Sentra, VW Jetta, and the Toyota Corolla all increased in volume in the auctions, while mid-size cars like the Ford Fusion, Kia Optima, and Nissan Altima collectively had volume increases by an average of about 39%. On top of this, consumers have not had much good news on the economy, where nominal job growth and slow economic improvement caused consumer confidence to tumble in May. The Euro crisis and the unknown financial implications to the U.S. are also putting a damper on any positive short-term opinions towards economic recovery. May's depressed results, combined with last year's dramatic appreciation, put prices for compact and mid-sized cars well below last May. The comparison is somewhat misleading since prices for these segments were at an all-time high, but still points to what NADA believes is the start of a normal depreciation trend for the remainder of the year. While losses for car segments were large by recent standards, minivans dropped by over $600, the biggest drop of any segment, and again, prices were pressured down in part by a 10% increase in fleet volume. Declines were not limited to just the small and mid-sized car segments or from fleet increases on specific models. Compact and mid-sized sport utilities also dropped, with large trucks and luxury models showing the strongest performance with just under 1% decline. Despite May's losses, overall market prices relative to the first of the year remain up by about 6% and are expected to have strong year-over-year comparisons as the market follows a more seasonal trend. Although expect prices in the next couple months to experience fairly dramatic drops, much like last year. We continue to remain in a tight used supply environment, and barring any price-eroding strategies in the new car market, used prices will continue to support a healthy automotive industry. For more information, please see this month's guidelines at NADA.com.